In this video, traders, we're going to look at, can you make an extra 10 grand a year just by choosing a better broker? Stay tuned. Hey traders, a very warm welcome to you. All right, so if you are a trader, an active trader, I've got three examples here for you: day trader, pair trader, scalper. Most of us, a lot of us are going to fit into the day trading category. I know many people actually pair trade. We'll talk about that in a second. And scalpers, those super active guys I know out there who are scalping away, minute little movements, grabbing little bits here and there, jobbing the market backwards and forwards. So what I want to do is kind of look at the hidden benefits potentially of looking at a broker that charges you a narrower spread. Now, we have got a channel sponsor. A link is in the description below. However, I am not saying that you definitely need to go out there and change brokers immediately, nor am I saying you should choose specifically that broker. It's going to depend on the instrument you're trading. It's going to depend on the market times you're trading. It's going to depend on lots of different things. So that's one below that you can check out. But of course, you know, we're all about making as much money as possible here, guys. And this is something that potentially can add something to our bottom line without doing anything, but doing a little bit of due diligence, a little bit of looking around and potentially changing things around. So let's look at this example. So if you're a day trader, right, standard day trader, you're doing 5 trades a day. Now this is not that much of an active day trader. I'd say scalper's very active, but 5 trades a day, day trader. Say you're spreading it around on different instruments, or say you're kind of trading a couple in the morning at the open, maybe it's a lunchtime setup, maybe a couple in the evening. It's not a lot. We're not talking a very, very active prop style trader here. So someone's trading 5 trades a day. So you're doing 25 trades a week. So Monday to Friday, you're trading 5 trades a day, 25 a week, around 100 a month, or let's say 1,000 a year, allowing for some off time, etc. So you're doing 1,000 trades a year. So let's, for argument's sake, say you're doing £10 a point. You know, we're not talking huge amounts here, and we're not talking small amounts. £10 a point, kind of a standard-ish size. Maybe that's a bit high for some people, maybe it's a bit low for some people. So adjust it to suit. So if you're doing £10 a point, right, you're doing 1,000 trades a year. Now, if you're trading an instrument, and this is actually based on real kind of research, if you're trading an instrument that's got a 3-point spread out of hours, for example, let's say you trade the Dow, but you only like to trade it during the European and Asian session. Let's say you don't want to trade it during the regular trading hours because, for whatever reason, you're normally paying a 3-point spread on that. And then you move to a broker that's got a 2-point spread, you're saving a point for every trade you do. Now, if you're doing 1,000 trades a year, £10 a point, 1 point, that's an easy 10 grand you've just put in your pocket by moving to a broker. Now, am I saying that you're going to be able to save a whole point on every instrument? No, you're not. Like, for example, if you look at the DAX, you trade the DAX intraday during regular trading hours. Most brokers offer it at a point anyway, so you're not going to be able to get that saving. Maybe you find the broker that offers it at 0.8, so he's going to save a little bit, a couple of grand. But the 10 grand, maybe not. But for that specific example, if you're trading after hours, something that's a little bit wider, maybe you've got a good edge in that, to have it down by a point makes a lot of difference. So, you know, that's a real world thing. Now, would you possibly trade after hours an instrument? Possibly not, but you get the idea. What about if we look at a pair trader? So say a pair trader, he trades 1 trade a day, 5 trades a week. So pair trade, in other words, is buying FTSE, selling DAX, or he's buying BP, selling Shell. He's looking for the the difference between the two. She's trying to capitalize on the convergence and divergence of the pair. And they're doing 20 trades a month, 200 trades a year. But of course, with a pair trader, you're doing both sides. You're doing really effectively 400 trades a year because you've got 2 legs for 1 trade. So 400 trades a year, yeah, you're not quite doing 10 grand, but if you're doing £10 a point, and you're probably going to be more than that because you're trading a ratio and a differential, your size is probably going to be a little bit higher. But assuming it's not, you've still got a decent saving there. You've still got 4 grand saving if you're looking at 1 point. Maybe you've got 2 grand saving if it's not much less. Maybe it's a grand, £1,000 extra just by changing broker. Now, you need to be careful when you change broker. You've obviously got to make sure they trade the instrument you want. You've obviously got to make sure that spread is fixed during the times you're trading. You've also got to make sure you can get the fills you want. It's got the features you want. It's not just as simple as looking at headline spreads, guys. Don't let anyone tell you otherwise. Headline spreads are good, and it's a start of a process to do some due diligence, but there's more to it than that. So you've got to kind of make sure it fits for you. But I'm just highlighting this because very often we don't consider it. And you know, I've spoken to other traders, very active traders who are trading significantly more than this kind of thing, super silly frequency like this level, but really kind of big position sizes, and a slither of change. And these are guys going direct access to the market. But a slither of changing commissions, you know, means a massive amount to them, and it's money that they just given. You know, they don't have to change their trading style, they don't have to worry about the mindset, strategy, etc. It's just if they carry on trading at the R, they're getting an extra 30k, 40k, 50k, whatever it may be. In this case, you know, we can see that 10 grand can be made reasonably just by kind of being a bit sensible about where you trade. Another one, guys, you know, Scalper. Probably don't need to show you this, but if you're a scalper doing 20 trades a day, and I know there's plenty of you out there who are jobbing stuff in and out, back and forward, you're doing 4,000 trades a year. Now, it might be extreme to say you're going to be scalping on a 3-point spread that goes down to 2. And listen, let's be real, it's probably not going to happen. You're probably not going to be like, okay, well, I've gone to a 3 to 2, I'm saving 40 grand a year. I get it. But you might still say, okay, it was 1 point and now it's 0.75 points. So say it's saving you a quarter. There's your 10 grand right there. If it's saving you a quarter on the spread's tight and it's going tight, right? If it's going to 1 to 0.8. So I know a lot of brokers are offering 1 point, a lot of things, they're moving to 0.8, a lot of things. Might not seem like a lot, but if you're very active, then it's going to add up over time. So anyway, guys, the kind of things I want to put across here is that don't overestimate the advantage of having a tight spread. Have a look and see what you trade and just do some maths. Just spend 20 minutes looking about all the trades you've done, how much spread you've paid, and where you could go. Because some people don't trade the same instrument. I get that. We kind of flip around, trade different things. So maybe look and say, well, if I was to save a little bit, how much would I then have in my pocket now? What would my account balance be sitting at now? How much extra money would I have? And that works for both sides. If you're going through a losing phase or a winning phase, it's still money you're making. And some people, that might be the difference between positive and negative, especially scalping where the edge is razor thin. So there's that to look at. But then, of course, you know, you need to look at the broker you're moving to. And again, we do have a channel sponsor. The link is in the description below. However, as I said before, guys, you have to do your own due diligence. It's one to consider, but there's others to consider as well. And it's not just as simple as, and this is what I really want to try and get across, I'm saying just go straight for the headline spread. You need to go check out the platform, check out that actually in the real world you're getting the fills you want. Check out that you're getting the spread that you want, your service you want. There's no point in going for a headline spread and saying, oh yeah, I'm going to save 10 grand a year based on me doing 5 trades a day at £10 a point, if you can't get access to a certain market that gives you a kind of a good edge in a certain conditions, or you can't get the fills you want under the conditions you want, or you can't do a trading stop, or you can't do this, or you can't do that. You know, you have to look at it as a whole package. It's not as simple as a lot of people tell you and go, well, it's cheaper, just go there. Because no, there's few more things to consider. It's not like going direct to the market where most of the platforms are very similar, just the clearing firm is slightly different, in which case the commission, you just want the cheapest commission because you're using the same structure and front end if you're going direct to the market. Whereas it's a bit different using the broker's platform, especially for spread betting. But what I want to get across, guys, is that you can save a lot of money. And even if you're saving a couple of thousand, £200 a month, say, extra per year for doing nothing than doing a bit of due diligence and trading a specific instrument perhaps through one broker and a specific instrument through another. I've done that plenty of times where I've traded one instrument through one broker and another instrument through another, just because they're not competitive on some brokers aren't competitive on everything. So you go to the one that's the most competitive and suits you for the instrument and the market hours, etc., that you're trading. So take a bit of time to do that. And the good thing is, once you've done it, you kind of just put it down in your calendar to review every quarter. Say, am I still getting the best from my broker? Am I still using the best broker for my needs? Have I changed strategy? Have I changed market? Have the conditions changed? Am I still happy? And generally, can I save any money elsewhere? And just not overthink it, but just kind of do it and then put a schedule in, say, right, quarter, time to sit down for an hour, do some research, make sure I'm getting the best deal. And also, my little tip, guys, is that if you're kind of one of these guys who's very super active, there's no harm in ringing your broker and saying, hey, can you do a deal for me? Any deals to be done? Anyway, that's it, guys. Can you make an extra 10 grand per year just by choosing a better broker? I think we've proved that you can under different circumstances, depending on the type of trader you are and type of volume that you're doing. So take care. See you next one. Bye-bye.